प्रेजेंटेड बाय eBix कैश। हर खुशी के लिए काफी है।
Hello and welcome to a special edition of the Business Today show. I'm Abha Bakaya and you're watching our Diwali special edition. Samvat 2077, a year to remember for a lot of reasons. The Indian markets created history by hitting one milestone after another. After a period of unprecedented pessimism due to COVID-19, animal spirits have been unleashed in the economy again. Diwali festivities have brought an all-round cheer with shoppers returning with a vengeance. Major economic indicators are pointing north, though there are still clear and present threats to the economy. So, our big question today, is the Indian economy back on track? Well, it surely is a happy Diwali for the Indian economy, which is setting foot into greener pastures. The economy is making a strong comeback post the pandemic blues. Key high-frequency indicators have posted record high growth in October. Take a look at how the Indian economy is making a comeback.
More than a year after the pandemic knocked the wind out of India's economy, India is making a strong comeback from the COVID-19 aftershock. The lively pace of vaccinations is acting as a booster shot for the economy, with growth picking up pace across sectors. Key macroeconomic indicators are firmly in the green, and the Indian economy looks set for a sharper rebound. Indicators like GST collections, e-way bill generation, card transactions, and purchasing managers index for manufacturing and services have posted record high growth in October. With COVID cases on a downward trajectory and vaccinations going uphill, the GST mop-up may touch the 1.4 trillion rupee mark in November, up from 1.3 trillion rupees in October. A strong rebound in manufacturing and construction has helped GDP bounce back, with the latest quarterly GDP growth at 20%. The Purchasing Managers Index for services rose to 58.4 in October from 55.2 in September. Hiring activity is also seeing a phenomenal rise, expanding by 43% annually in October, as per a survey by Naukri.com. With more companies going public, new investors are also flocking to the Lal Street. India Inc. too has had a blockbuster quarter, with most companies exceeding quarterly earnings expectations. The steady increase in prices of commodities may play a dampener and also have political implications ahead of crucial state assembly elections just a few months from now. Bureau Report, Business Today Television.
Joining me on the show today, our panel of editors to decode the economy and the kind of progress we've made post-COVID-19. Siddharth Zarabi, Managing Editor, Business Today Television, Saurav Majumdar, Editor, Business Today Magazine. But before we kickstart that debate, we also have with us the Principal Economic Advisor to the Finance Ministry, Sanjeev Sanyal. I want to go across to Mr. Sanyal. Thank you so much for joining us. Want to get straight to the point. According to you, is the economy fully back on track?
I think there's no doubt that the Indian economy is gathering momentum very strongly. So almost any high-frequency data you look at, whether it's mobility indices or exports or imports or GST collections, PMI data, everything suggests that the Indian economy is accelerating very, very strongly. And in fact, I think we are more than on track to get double-digit growth in this financial year. And I would posit that we may even get a double-digit growth next year if this momentum is maintained.
That's a good point. Sanjeev, I want you to tell our viewers about how you read the latest auto sales numbers. There's basically a mixed picture. Passenger vehicles have done okay on a sequential basis, but two-wheelers are not. And two-wheelers, as you know, are used by a certain strata of society. According to you, is this an indication of have-nots not consuming as much as the higher-end consumers are?
Well, I mean, the point is that, first of all, not every sector would have revived, that we know. But on the other hand, the fact of the matter is that we are also seeing a fairly widespread recovery across the country, so geographical spread seems to be reasonably good. Even in terms of by income group, I would argue that there are segments that are doing quite well in consumer spending as well. So while you're right that certain kinds of spending may, for example, scooters suggest that maybe there are some segments where it is not quite there, it will spread. I mean, these are only for the last few months have you seen these kinds of very strong numbers. So you give it some time to spread. I would argue that, I think it will trickle down far enough. But even if it doesn't, the good news is that the tax revenues have been so strong that we are in a position to spend where necessary. For example, on capital expenditure, where we could generate jobs and create demand in segments that hire, for example, semi-skilled labor and so on. So there will be some amount of natural trickle down, which will happen because the larger corporates are clearly becoming more profitable, and there will be a suction in terms of down the supply chain internally. But you will also see, as I said, the impact coming through from our own spending, second order impacts of opening up certain sectors which are still closed, such as tourism, live entertainment and so on. Those things are still to be opened up properly. So all of this, I think, will gather pace.
Is inflation a risk factor, Sanjeev? Because fuel prices have already become a key concern for consumers.
So there are two issues here. One is on generalized inflation, one is specific to oil, which may of course become generalized, but right now is at least confined to oil, petrol and things like that. I think generalized inflation does not seem to be spiraling out yet. Although globally there are many supply side hiccups, whether it is in terms of chips not being available, containers and so on. So this is the reason, incidentally, right from the beginning, if you remember, India was the only country that placed a lot of emphasis on the supply side. So despite that, there are many supply side hiccups that are popping up as the world economy recovers, and we are not immune from that. But I think on that front, we are doing reasonably well. Where we have a special problem is obviously on oil, because we are an oil importing country. Global oil prices have now gone up to $85 a barrel, which, there is very little we can do to influence that, although of course consumer countries are beginning to now raise their voice. But nevertheless, that is an issue. There is an additional issue, which is the only place where we can perhaps think about it, which is about the additional taxes that were introduced on oil prices during the peak period of the first lockdown. Now, obviously, that money was needed in order to finance vaccination and other things. So it's not like we did it for idle imposition of a tax. But we do recognize that that has some role. Part of why the prices are high is due to that. There is, however, of course, a trade-off that we have to think about between collecting taxes and the need for somewhat easing off of these oil prices. Now, it is not something that the government is not aware of. I mean, that's much discussed in every interview I come to, in every newspaper article. It is mentioned somewhere. Even when I fill my own petrol tank, I can see that. So it is not something we are unaware of, but a judgment has to be taken on this, and it will be taken at the appropriate time and at the appropriate level.
All right. Sanjeev, thanks so much for joining us and sharing those key insights with us. Let me bring you in at this point and get your take, from the kind of sense we've got. You just even conducted the business confidence survey, at the magazine. Tell us what the indicators are saying in terms of the economy, how it's picking up, and whether or not that momentum is expected to continue.
Abha, I think the Business Today Business Confidence Index pretty much expects that the economy will continue on a positive momentum. In fact, the index is at its 10-quarter high at 49.2, And just the last quarter, it was very, very low, and it's really rebounded very, very sharply. And I think it's because of a couple of factors. I think many of these things we just discussed, Sanjeev has just pointed out. I think there is an optimism which is setting in among corporate leaders that they are better equipped now to take on supply side challenges, etc., posed by, if necessary, they have to face these COVID disruptions again. They are much better prepared. I think that is one major confidence element which is coming through. Then there is a lot of optimism, I think, around disinvestment and the way in which the government. I think overall there is a lot of positivity around the way the Air India disinvestment was conducted, the asset monetization pipeline. I mean, of course, there is a lot to be seen in terms of how it plays out, but I think there is the fact that it was done in a very clear and transparent manner, laying out the assets on the table, and that will create jobs is the expectation, jobs and opportunities. I think that is also taken, and I think overall the optimism is very much for all to see. Now, the note of caution, of course, is whether we can see this completely playing out even after the festive season.
Siddharth, let me bring you in here. And before we get to the challenges in a bit more detail, we've also been hearing a lot of positive views coming in on the financial space, saying that largely there has been a cleanup that's taken place. Books seem to be in order. If anything, I think COVID has given an opportunity for several of these key institutions to really relook and consolidate. And is that, one really big area that is reassuring, perhaps, from an economic point of view?
That's a wonderful question, because remember, the IL&FS turnaround saga has just been, in some ways, given to us by Uday Kotak. More than 60% is going to come back. That's a very significant number. Look at the PSU banking space. I think there's a clear indicator that the nervousness, uncertainty, and the debacle specifically that we saw in certain large financial sector entities are behind us. And if you add in terms of financial regulation from the RBI standpoint, the supervision of NPAs, I think we've done all the heavy lifting. There is, of course, a bit of concern around what will happen once the moratorium goes, the COVID moratorium that was handed out, and what will be the fate of NPAs, but we'll have to wait for that data. So I think it's an absolutely correct point that the lending world of part of our economy is perhaps in a better shape to lend. Can consumption sustain only on the back of the kind of consumption that we have been seeing, or will come budget time the government have to do the next round of heavy lifting and perhaps giving more money in the hands of consumers, which is what was left out to some extent during the COVID packages? That's the key question that we need to wait and watch for over the next 3-4 months.
In terms of reforms as well, and Saurav, let me put that to you. The government has really been on overdrive. Whether or not we see this now sort of filtering in terms of economic impact is yet to be seen, perhaps over the next couple of quarters. But there have been some key reforms that have been pushed through in an attempt to handle or mitigate the impact of COVID. For instance, as recently as this week, we heard of the tourism sector being allocated infrastructure status. And that's only one of the reforms that I'm mentioning.
Yes, Abha, I think on the reforms front, the government has been very, very focused and clear. If you look at the telecom space, if you look at the creation of the bad bank, which Siddharth mentioned about the banking sector, there are a lot of pluses. Most importantly, as I keep coming back, there was a lot of criticism about how whether or not at all the government could go ahead with Air India. There was a failure the earlier time in 2018. This time they changed the sort of the model into an enterprise value format and gave it to possibly the best buyer there could be in the current situation. That has also added a lot of positivity, and I think some of these things. But as I keep saying, we need to see the proof of the pudding going forward will also be in the eating, because you'll need to see whether this pent-up demand sustains itself, and whether like Siddharth said, said, we need to again think of putting more money in the hands of the people at the budget time. And also, I think whether some of these steps like the asset monetization pipeline, it's all very well to sort of lay down the pipeline and say that these are the things. How it plays out, it's the implementation challenge, which is always going to be the key. And how the government sort of moves forward is going to be critical going.
All right, gentlemen, we'll have to leave it there. We're out of time on the discussion, but India has clearly emerged as one of the stronger economies post-COVID-19 in the global world order. And with markets also roaring from strength to strength, all eyes are now on India to see whether it can take the next big leap in its journey towards the $5 trillion economy. Saurav, Siddharth, thanks so much for joining us. Crowds are back in the markets this festival season. Sales on Dhanteras have been, as per reports, better than expected, and the festive mood is everywhere. One of the biggest beneficiaries of this uptake have been malls, which suffered tremendously in the lockdown. Business Today TV's principal correspondent Karishma Sudani caught up with Pushpa Bector, Executive Director DLF Malls, to get a first-hand idea of the return of the consumer.
The athleisure segment is one segment that's doing really well, and F&B is bouncing right back. Okay. They're all almost back to their 80% of their 19-20 levels, and because there is dispersed sort of sales. We have seating which is still at 50%, but what tends to happen now is people are planning their shopping as well as their dining in a much better way. They're preferring lean hours too, which is why you're seeing better sales. And also season is back and we are seeing families coming right back. I think these are the two big trends that I see. But as far as overall at a portfolio level, we are looking at fashion bouncing right back, fashion and beauty. The international luxury brands have done extremely well. They have overdone their 19-20 levels purely because international travel is still restricted. So the domestic consumption of luxury has been extremely good. And we've got the millennials actually coming right back, shopping luxury.
Of course.
And that's helping, So overall, it's a good season that we are looking forward to.
Sensex ends Samvat 2077 on a weak note, dropping 257 points. Nifty also ended in the red, down about 59 points. But it was able to hold 17,800. Markets dropped amid weak global cues as investors remained cautious ahead of the Fed policy announcement. Gains in infrastructure, metal and select IT shares arrested the fall today. Blue chip stocks, Larsen & Toubro, Asian Paints, Hindalco, Grasim, UPL among some of the top gainers. On the other hand, Sun Pharma, IndusInd Bank, Bharti Airtel, ICICI Bank and Kotak Mahindra Bank were the worst hit in the Nifty pack. Welcome to AskThen, our weekly segment where we answer all your stock market specific queries. Our global business editor, Udayan Mukherjee, will be taking select questions every week to help you strategize in a market that continues to surprise on the upside. Let's get straight to some of those questions. And remember, if you would like to write in or send in your video query, just WhatsApp us on the number coming in on your screen. We'll answer a select few every Wednesday. Let's begin today with our first viewer. The questions coming in from Kolkata. Let's listen in.
Should we buy Deepak Nitrite at present level?
Well, Deepak Nitrite has been an absolute scorcher. I mean, the speed at which the stock went up to 3,000 rupees, I think, left everyone quite breathless in the market. Yes, it's a good specialty chemicals company, but these companies were moving like almost digital enterprises these days. It's a good company, and I think it can continue to grow at 20% plus in the foreseeable future, the next 2 or 3 years. The only thing that one needs to be a little wary about, cautious about with Deepak Nitrite is that whether this company is trading at fairly peak kind of valuations. I'll tell you why, because almost 2/3 of this company's business comes from phenolics, and phenolics is a fairly cyclical business. It has up cycles and down cycles. The current prices in the market seem to suggest, and even the demand supply metrics are such, that it could be possible that phenolics is trading very close to a cyclical peak, and at this kind of level, to give Deepak Nitrite a greater than 30 PE multiple from here on I think might be a little dangerous. So while it's a good company and it has a very good portfolio of chemicals and it's very well run, I think the cyclicality element of Deepak Nitrite's business, given its large exposure to phenolics, is something that investors should keep in mind. And therefore, I would submit that one should not chase the price for Deepak Nitrite. Let it cool down, and only if it cools down to below, say, rupees 2,000 per share, one could consider it, because it's had too good a run already.
Okay, here's another interesting question coming in from Ravi Joshi in Mumbai. Listen into this one.
Hi, Udayan. First of all, it's great to see you back. My question is with respect to Relaxo as an investment opportunity for 5 to 10 years.
Well, Relaxo is an evergreen kind of a stock, and it's almost like, I mean, it's not a nice thing to say about every stock, but it is really one of those secular growth stories in the market, because the addressable market in low-priced and mid-priced footwear in India is very large. Relaxo is a dominant player, as you know, in it. It has a very good balance sheet, it's debt-free, it has solid return ratios of 20% plus, and it's easy to imagine Relaxo compounding its earnings by 20% plus in the time horizon that you mentioned. So I think it will be a very good compounding machine. Also, its distribution is extremely strong, and it's making greater inroads into the southern part of India, where traditionally it has not been as strong as the north. So as more addressable markets in the south open up for Relaxo, I think it could continue its growth story for a while. The only thing is that it's trading close to new highs. It's a 75-80 PE multiple stock. So timing the entry is a tricky one for Relaxo, whether you wait for corrections or do you pay top dollar and let the earnings growth take care of the price. That's a difficult call, but I think for the time horizon that you mentioned, there's no harm in holding on to it.
And that's where we leave it on the show today. Do keep sending in your queries on the number on your screen. We'll answer more questions next Wednesday on our special segment Ask Then. Wishing you all a very happy Diwali.